Hello there, you're watching Bizworld. The outcome of the 15th general election constitutes a worst-case scenario for markets, with investor sentiment likely to remain clouded. At the opening, the benchmark FTSE Bursa Malaysia KLCI fell 17.78 points to 1,431. According to RHB research, market sentiment would depend on the duration of the power vacuum, quality of the cabinet members, as well as the parliamentary majority of the eventual government that would determine its ability to institute reform. The firm said the global macroeconomic challenges next year would require a swift retabling of 2023 budget and the establishment of key government economic priorities, initiatives to rationalize subsidies and proposals to broaden the tax base and institute economic reform. Malaysia has found itself in uncharted political waters in the aftermath of the GE15, where no single coalition has secured enough parliamentary seats to form a government. Stock market analysts have cut their FBM KLCI target for end 2022 to as low as 1,450 points in the absence of any coalition securing a simple majority in the newly concluded GE15. Kenanga research said Malaysia will only usher in another joint government or minority government, thus making it extremely challenging for new policy initiatives and reforms to be pushed through. A knee-jerk market sell-off is expected due to the country having at best a joint government. During late February 2020, in the aftermath of the Sheraton move that brought down the Pakatan Harapan government, leaving the country without a functioning government and a prime minister, the FBM KLCI fell as much as 4.6% from 1,537 points in mid-February to a low of 1,467 points on March 2nd, 2020. CGS CIMB Securities also lowered its FBM KLCI target for end 2022 to 1,484 points from 1,556 points previously to reflect short-term political uncertainties. Foreign investors turned net sellers last week to the tune of 272 million ringgit, a reversal from the net inflow of 425.62 million ringgit in the previous week, due to a shortened trading week for the 15th general election. MIDF research stated the market was closed last Friday in order to enable voters to cast their vote in GE15. The net selling started on Tuesday, which saw the highest net outflow for the week at 185.5 million ringgit. In contrast, local institutions were net buyers last week with a total net inflow of 152.5 million ringgit. Local retailers turned to net buyers last week with a total weekly net inflow of 119.6 million ringgit, a positive reversal in comparison with the 173.6 million ringgit net sold in the week prior. Retailers started off the week by net selling 21.3 million ringgit worth of equities. The ringgit slipped further against the US dollar this morning, extending last week's downtrend as the first ever hung parliament outcome in Malaysia shook investor confidence. At 9 a.m., the local note slid 290 basis points to 4.578 versus the greenback. However, analyst Stephen Innes believes the market would take the general election results in stride, given that the hung government was expected. More political horse trading and compromise in such a setting is expected, which could provide checks and balances with a focus on the formation of the next government. From the market's perspective, however, the GE15 results may fail to ease concerns over the recent phase of political instability, which had been hanging as a dark cloud over Malaysian capital markets. Investors have been shrugging off the hawkish US Federal Reserve interest rate hike decisions and peering down the China reopening looking lens, which should be favourable for local capital markets. Kenanga Investment Bank expects 2022 exports will be retained at 27%, supported by the weaker ringgit, despite the expectation of a subdued fourth quarter outlook. The investment bank said exports expanded by 28.5% year-on-year, underpinned by strong demand from key trading partners and partly contributed by the weaker ringgit. Malaysia's October exports rose by 15% to 131.6 billion ringgit, which made the 15th consecutive month of year-on-year growth. Total trade in October 2022 also expanded by 21.1% to 245.1 billion ringgit. Bank research, however, said total trade growth for October was the slowest since February, with exports seeming to be showing signs of slowdown despite the healthy growth. That's all the time we have for Bizworld. I'm Nadia Azmi. Thank you for investing your time with us.